In life, there are moments when we are tempted by things that seem simple and easy. A discounted item, a lucrative offer, or an opportunity that seems too good to miss. All of these promise instant comfort, immediate benefits. But life doesn't operate on such straightforward rules. Things that come easily often don't stay, and cheap things often carry an unexpected cost. The old saying goes, "Man proposes, God disposes," reminding us that hasty, rushed decisions made for small gains often lead to unforeseen consequences. The financial market is no exception. In Forex, where every trading decision reflects human expectations, ambitions, and fears, short-term benefits that seem easy to attain are traps that ensnare traders. Just because of a small signal on the screen, just because of an opportunity that seems foolproof, countless people have paid the price with their accounts, their trust, and even their financial future. So, how do we avoid these traps? How do we resist short-term temptations and focus on the bigger picture? This is what we'll explore in this video podcast. Looking at the Forex market, it's not hard to see the strong appeal of trades that bring short-term profits. They are like sweet candies, bright, alluring, and convincing you they'll bring immediate joy. But like all things too good to be true, they come with a price. Many traders enter such trades with the mindset, just one small win to regain confidence. But they don't realize that each small, poorly analyzed, and unprepared trade is a step closer to greater losses. One wrong trade not only loses money, but also brings insecurity, regret, leading to even more rash and risky decisions. Imagine buying a cheap office chair, initially feeling like you saved quite a bit, but after a few months of use, the chair breaks down, forcing you to replace it. The total cost, both in money and time, far exceeds the investment in a quality chair from the start. Forex is no different. Every time you get caught up in small profits without careful consideration, you are sacrificing not just capital, but your strategic thinking ability. Smart traders will forego minor immediate benefits to aim for larger goals. They understand that success in Forex doesn't come from winning every small trade, but from maintaining discipline, strategy, and a long-term vision. Don't let fleeting, golden opportunities blind you. Instead, focus on the bigger picture, where calculated decisions will lead you to true stability and success. We often hear stories of sheer luck, lottery winners changing their lives, or a bold investment suddenly yielding massive profits. These stories, whether true or mere rumors, always have an irresistible allure. And then many enter the financial market with the mindset of waiting for their time, hoping luck will help them win big without much effort. But the harsh reality of the market doesn't favor dreamers. 2. The mindset of relying on luck. Relying on luck often resembles walking blindly on a fragile bridge. A few times you may safely reach the other side, but eventually a misstep is inevitable. In Forex, this is even more apparent. A trader who enters a trade based solely on feelings or a vague signal without careful preparation will soon realize that luck is only a fleeting phenomenon and can never replace strategy and thorough analysis. Imagine this: you see the price of a currency pair suddenly skyrocket and you decide to jump in and buy, hoping the price will continue to rise. No chart analysis, no understanding of market trends. You simply think, my time has come. But the market doesn't operate based on personal emotions. Prices can reverse at any moment, leaving you with a losing account and an expensive lesson. Unlike dreamers, professional traders do not wait for luck. They create opportunities for themselves. A successful trade for them is not the result of randomness, but the product of thorough research and a clear plan. They spend hours analyzing charts, observing trends, reading economic news, and examining possible scenarios. Every decision they make is data-driven, not based on feelings. A professional trader understands that the Forex market is not for the impatient. They do not jump into the market just because they see an enticing signal. They wait, not because they are hesitant, but because they know that every genuine opportunity requires careful consideration. They don't trade to gamble. They trade to build a career. Success in Forex is not the story of lucky moments, but the journey of making the right decisions. This begins with establishing a clear trading plan, profit targets, acceptable risk levels, and specific strategies for different market scenarios. This plan not only helps traders control their emotions, but also protects them from impulsive decisions under pressure. The financial market, with all its harshness, does not forgive those who only rely on luck. But for those willing to learn and prepare, it is fertile ground for sowing the seeds of success. And with each winning trade, based on careful analysis, professional traders prove that true luck is not something that happens by chance. It is a reward for discipline and determination. 3. Weighing benefits and risks. In the alluring and competitive financial market, Forex is not only a playground for those seeking quick profits, but also a battlefield that tests every trader's analytical skills and self-control. Amidst the opportunities that promise great rewards, there are always dangerously tempting offers, the cheap benefits of unfounded trading strategies. These often take the form of high leverage, hot signals, or quick win opportunities. Without carefully weighing benefits and risks, impulsive decisions can come at a steep price. One of the most common temptations in Forex is high leverage. With the promise of rapid growth, leverage creates the illusion of financial power far beyond your actual capacity. With just a small amount of capital, you can control sums many times larger. But like a sharp knife, leverage not only amplifies profits, but also magnifies risks. A small market fluctuation can wipe out your entire account within minutes. Imagine using 1-10-0 leverage to trade. A 1% market change doesn't just affect your profits, but multiplies potential losses by 100 times. At that point, the small gains you hope for become meaningless compared to the enormous risks you face. Inexperienced traders are often lured by trading strategies based on hot signals or breaking news. They dive into the market hoping to make quick profits without dedicating time to thorough analysis or assessing the sustainability of their strategy. But a strategy built on uncertainty is no different from a house built on sand, easily crumbled by unexpected volatility. Professional traders understand that short-term gains are only valuable when aligned with a long-term plan. To achieve this, risk management is not just a part of the trading strategy, but its most critical pillar. Each trade must be executed with careful calculation. Stop-loss levels, profit targets, and risk/reward ratios must be clearly defined. If short-term benefits are the flames that attract, then risk management is the shield that protects traders from market uncertainties. Successful traders share a common trait. They never bet their entire capital on a single trade, no matter how enticing the opportunity may seem. They spread risks, set reasonable stop-loss levels, and are always prepared to accept small losses to safeguard their accounts from greater damage. Forex is not a place to seek ease. Every benefit achieved must be exchanged for patience, skill, and emotional control. Successful traders never let short-term benefits obscure their long-term vision. They understand that only by carefully weighing benefits and risks can they build a sustainable trading journey and achieve true success. Remember, in a world where numbers constantly fluctuate, only caution can bring safety and stability. And when you learn to consider all aspects of each trade, you are not just a profit seeker, you have become a true trader. When it comes to Forex, people often think of complex analytical techniques, charts, and strategies, but there is a softer, subtler, yet equally important element: emotions. The video emphasizes that foregoing immediate benefits to safeguard the future is not only a practical act, but also a testament to emotional control. Be ready. There may be distractions and taints, but there is a testament to emotional control, a mastery every trader must possess. 4. Acting on emotions. In trading, one of the most common emotional traps is the fear of missing out. You see prices rising suddenly, and the regret of not joining earlier pushes you to rush into buying, even though the price is already too high. The result? The market reverses, and you become a victim of your own hasty decision. Similarly, when prices drop, the fear of losing money causes you to panic sell your assets, even when there's no sign that the market will continue to plummet. This is the trap of buying high, selling low, a dangerous psychological loop. Acting on emotions isn't limited to fear. Euphoria after a series of winning trades is also an arch enemy of discipline. Traders can easily become overconfident, increasing trade sizes or ignoring risk management principles. But when the market turns, that euphoria quickly turns into despair. Successful traders understand that Forex is no place for impulsive decisions. Controlling emotions not only helps them make sound decisions, but also shields them from unnecessary losses. To achieve this, they employ specific measures. Stick to the trading plan. A well-constructed plan acts as a roadmap. By adhering to the plan, you have a foundation to rely on, no matter how strong the momentary emotions may be. Use stop-loss and take-profit levels. These are not just technical tools, but also mechanisms to protect you from emotionally driven decisions. Once set, let them operate automatically and avoid interfering under emotional influence. Take breaks. Continuous trading can easily wear you out and dull your alertness. Remember, sometimes staying out of the market is a wise strategy. Keep a trading journal. Recording your emotions and thoughts after each trade helps you identify mistakes caused by emotions, enabling improvement in the future. Emotions cannot be eliminated, but they can be controlled with discipline and preparation. Remember, Forex trading is a long journey. Every decision is a step along that path. If you let emotions lead the way, you'll easily lose your direction. But if you learn to control them, you'll not only protect your account, but also safeguard the financial future you are building. So, next time you feel restless over a market opportunity, ask yourself, is this a decision based on logic or just an emotional reaction? A truthful answer will help you not only trade better, but also become a true trader, one who masters their destiny rather than being a slave to their emotions.